Hello dear students, welcome to Devika's Commerce and Management Academy. Today we'll see short problems from this chapter Acquisition of Business. Short problems. It is based on simple formulas. So what are these formulas means? First thing, remember calculation of goodwill or capital reserve. So how do we calculate this? Goodwill or capital reserve. Sometimes you need to calculate goodwill and sometimes you need to calculate the capital reserve. Whatever it may, whether you are calculating goodwill or capital reserve, these formulas you remember. First formula compulsory. So that is net assets taken over. Net assets are taken over by the purchasing company, isn't it? Purchasing company is taking over the net assets. For that, formula is net assets taken over minus creditors. Creditors means which is given in the balance sheet. Creditors, bank loan, such kind of transactions we can take. We don't consider shares, we don't consider debentures, okay? So we consider only the third party, that is creditors or loan taken from bank, such kind of transactions. So net assets taken over means total assets taken over minus creditors. This formula is compulsory. If you find out net assets, so that is net assets taken over, then second step comes. Second step is to calculation of goodwill, purchase consideration minus net assets taken over. Net assets taken over already we found, na? And purchase consideration also always given in the problem. Purchase consideration means how much is the purchasing company going to pay to the vendor. Okay. So for example, purchase consideration is 1 lakh. Purchase consideration is 1 lakh given in the problem. And as per your calculation, net assets taken over, how do you got net assets taken over? Total assets minus creditors. So if net assets taken over, if it is say 70 lakh, as per the calculation, net assets is 70 lakh. Now here, which one is more? Purchase consideration is more, whereas net assets taken over is less. Purchase consideration is more, whereas net assets taken over is less. In such case, you are going to get goodwill. Goodwill, how do you get? Purchase consideration minus net assets taken over. Purchase consideration is 1 lakh and net assets taken over, as per this you got 70 lakh. Means 1 lakh minus 70 lakh, it comes to 30 lakh. 30 lakh will be the goodwill, the value of goodwill. If you see in reverse gear, say purchase consideration is 1 lakh. Net assets are suppose say 1,20,000. 1,20,000, 1.2 lakh. Purchase consideration is less, this is more. Purchase consideration 1 lakh, but assets taken over is more. In such case, the difference we call it as a capital reserve. How do you get capital reserve? Net assets taken over minus purchase consideration. Assets are more than the purchase consideration, that is capital reserve. Reverse, purchase consideration is more than the assets taken over, then that's goodwill. Ultimately, point number 1 is assets taken over, you have to find out total assets minus creditors. You are getting. Now according to this value, net assets taken over, if you compare with purchase consideration is more, goodwill. Purchase consideration is less, it's a capital reserve. So based on this amount, and we'll be comparing with the net assets, you will be getting either goodwill or purchase or capital reserve. Able to remember? Now we'll see one problem. And by the way, why do you say that goodwill, purchase consideration is more and net assets taken over is less? Why do we say it as a goodwill? Purchase consideration means whatever amount ready to pay by the vendor is more than the assets, then that will be a goodwill, isn't it? Company is ready to pay 1 lakh, whereas assets value is less. Means you are ready to pay more than the assets value. That's a goodwill. That's a goodwill. Means assets value is one. Say we thought 70 lakh, na. 1 minute. 70 lakh we thought. 70 lakh actually asset value, but you are ready to pay 1 lakh. 1 lakh means it's a goodwill. Whereas 1.2 lakh net assets are 1.2 lakh, assets value is more, but your payment is less. Asset value is more, your payment is less. Then that is a capital reserve. Where assets taken over is more than the consideration, then that's a capital reserve. If this is the case, purchase consideration is more, then that's a goodwill. Clear? Now we'll work out two problems. First problem is given on the desktop, you can see. The problem is here, following is the balance sheet of X and Y on the basis of which their business will be taken over by the ABC company. Balance sheet of XYZ is given, X and Y company, and this is taken over by ABC company is going to take over. What is there in the balance sheet? Plant and machinery, land and building, stock, cash, asset side. Now liability side, capitals of X and Y, and Mrs. X's loan, sundry creditors. Now after that, what they are saying, the company pays 2,25,000 for the business as purchase consideration. Company is going to pay 2,25,000 for purchase consideration. Purchase consideration, as I told you, it will be always given in the problem. Purchase consideration is given, okay, but does not taken over Mrs. X's loan. Calculate the amount of goodwill or capital reserve. What is, you may get goodwill or capital reserve. That is why they are saying calculate goodwill or capital reserve. So how do we calculate? I didn't keep the duster. Okay. Now first of all, as per the steps, you need first net assets taken over. Okay. First we'll say net assets taken over for problem number 1. Formula is already I have written. I don't want to write double time. Total assets taken over minus creditors. Total assets taken over means total value of the assets. Total value of the assets is how much? 2,20,000. Okay. 2,20,000 minus creditors. Creditors is how much? 25,000. 2,20,000 minus 25,000. So it comes to how much? 2,20,000 minus 25? 1,95,000 it is. 1,95,000. Look at the purchase consideration. Purchase consideration is, I'll write it here roughly, 2,25,000. This is purchase consideration. Purchase consideration. Now, if purchase consideration is more than the net assets taken over, that will be goodwill. We know that. Purchase consideration is more, net assets taken over is less. That is goodwill. Now, as per the answer, this net assets taken over is less, and whereas purchase consideration is more, the answer will be goodwill, not capital reserve. If this is more than 2,25,000, if it is 2,50,000 or 3 lakh or something like that, then the answer would be capital reserve. Now here purchase consideration is more than the net assets taken over. The answer is goodwill. So you will say goodwill is equal to, write the formula, purchase consideration minus net assets taken over. Purchase consideration is 2,25,000 minus net assets taken over. Net assets taken over, we got it. So 1 minus 1,95,000. So goodwill answer is here 30,000. This is problem number 1, short problem. We'll see another problem also. Am I clear about this? Any doubt? No. As per that, first of all, net assets taken over, total assets minus creditors. You got it. Then that one you compare with the purchase consideration. If purchase consideration is more, now here it is more than the net assets taken over. That's a goodwill. Second problem we'll see. It's different. Now second problem is here. Another one. Following is the balance sheet of A and B on the basis of which XYZ Limited will take over their business. What is given? Assets, plant and machinery, land and building, stock, bank balance. And liability side, A's capital, B's capital, Mrs. A's loan and bank loan. Rather than creditors, they have given bank loan. It is just like creditors only. Now coming to the adjustments, what they said, the company pays 1,80,000 for business as purchase consideration. Purchase consideration amount is given 1,80,000, but does not taken over the Mrs. A's loan. Without taking the Mrs. A's loan, purchase consideration is 1,80,000. Calculate the amount of goodwill or capital reserve. Same pattern. What we have to do first? Net assets taken over. This is second problem. We'll say once again net assets taken over. How do you get net assets taken over? Total assets taken over minus creditors. Total assets taken over is here. How much? Look at the problem and tell me. It is 2,10,000, right? So 2,10,000 return minus creditors. Creditors are not given, but bank loan is there. Bank loan is just like creditors only. So we can consider bank loan as creditors. How much it is? 25,000. Isn't it? It's 25,000. 2,10,000 minus 85,000. 25,000. How much it comes? 1,85,000 it is. So this is net assets taken over. Now look at the purchase consideration. Purchase consideration is 1,80,000. I'll write here only. This is 1,80,000. Second problem, 1,80,000. Purchase consideration is more than the net assets taken over. Sorry, net assets are more than the purchase consideration. Net assets are more than the purchase consideration. It means it's a capital reserve. If it is more, goodwill. If this is less than the purchase net assets taken over, then that's a capital reserve. It is less. So the difference is we say it as a capital reserve. Okay. Now I'll say capital reserve. Capital reserve is equal to, so what is the formula? Net assets taken over minus purchase consideration. Net assets taken over is more, 1,85,000 minus purchase consideration. How much? 1,80,000. It means capital reserve is here 5,000. Am I clear? This you have to understand. Only simple problems. Okay. So do you need screenshot? Yes. Simple. Only the thing is net assets taken over. How do you get? Net assets taken over is equal to total assets minus creditors. Okay. Now based on this, you have to see the purchase consideration. Purchase consideration is more compared to this net assets taken over, then that's a goodwill. If purchase consideration is less compared to this net assets taken over, that's a capital reserve. Simple. Based on this, you will be getting either goodwill or capital reserve. Am I clear? Next class, we'll see essay problem. Essay problem. For this, what is needed is here, you need to be thorough in the journal entries, and whatever I taught in the last class, that you need to be very thorough. Then only it is possible. Stay connected, practice well, and don't forget to share this video. See you in the next class. Good luck.